Here's something that'll change how you think about money forever. The difference between the rich and the poor isn't just income. It's how they treat taxes. Poor people see taxes as inevitable. Rich people see them as optional expenses to be minimized legally. That mindset shift alone has created more millionaires than any business degree ever will. Let me tell you something that might shock you. Last week I was having dinner with a client, a tech entrepreneur, worth about $50 million. And he casually mentioned his effective tax rate last year was 8%. 8%. Meanwhile, his secretary, making $65,000, paid 22% in federal taxes alone. How is this even possible? And more importantly, how can understanding this transform your financial future? I'm Franklin, and for the past 15 years, I've been running my own financial consulting firm. I've managed hundreds of employees across 8 different businesses, and I've seen firsthand how the wealthy play an entirely different game when it comes to taxes. Today, I'm pulling back the curtain on millionaire tax privileges that most people don't even know exist. The first thing you need to understand is that our tax system isn't designed the way most people think it is. In the United States, we have what's called a progressive tax system, which sounds fair on paper. The more you make, the more you pay, right? Wrong. That's only true if you're earning W-2 income like most Americans. But millionaires, they've figured out how to dance around this entirely. Take Jeff Bezos, for example. In 2018, when Amazon paid 0 federal taxes on $11 billion in profits, Bezos himself reportedly paid a true tax rate of just 0.98% on his wealth growth. How? Because his wealth doesn't come from a paycheck. It comes from appreciating assets, stock options, and strategic business structures that the tax code actually rewards. I remember when I first discovered this as a young financial advisor in Montreal. I had a client, let's call him Pierre, who owned a small manufacturing business. He was complaining about his tax burden, paying around 35% between federal and provincial taxes. I showed him how to restructure his business, separate his real estate investments into an LLC, and utilize depreciation schedules. The next year, his effective tax rate dropped to 12%. Same income, different structure. This isn't about illegal tax evasion. This is about understanding legal tax optimization that's been available all along. The wealthy hire teams of accountants and tax strategists not to break the law, but to use it to their advantage. They know that the tax code is essentially a series of incentives disguised as rules. Here's where it gets really interesting. In France, they tried to implement a wealth tax in the 1980s. You know what happened? The wealthy simply moved their money elsewhere or restructured their holdings. The government collected far less revenue than projected because they misunderstood how wealth actually works. Real wealth isn't sitting in checking accounts. It's tied up in appreciating assets, business equity, and investment vehicles that often qualify for preferential tax treatment. Let me share something from my own experience. When I started my first business 8 years ago, I was paying taxes like an employee, taking every dollar as salary and getting crushed by payroll taxes. My accountant, a brilliant woman who'd worked with several Fortune 500 CEOs, sat me down and explained something crucial. Franklin, you're not thinking like a business owner. You're still thinking like an employee. She showed me how to pay myself a reasonable salary and take the rest as distributions, how to write off legitimate business expenses, and how to use retirement accounts that most people never even hear about. My tax situation transformed overnight, legally and ethically. But here's what really frustrates me about this whole system: the knowledge gap. These strategies aren't secrets locked away in some millionaire vault. They're sitting right there in the tax code, available to anyone who takes the time to understand them. Yet somehow, this information never makes it to the people who need it most. Hey, before we dive deeper into these specific strategies, I want to ask you something. Creating content like this takes enormous amounts of research, consultation with tax professionals, and honestly, quite a bit of courage to share information that some people prefer to keep quiet. If you're getting value from this, and I know you are because you're still watching, would you mind hitting that subscribe button? It genuinely helps me justify the time and resources I put into making these videos. Plus, subscribers get priority when I respond to comments, and trust me, you're going to want to ask questions after this. Let's keep going. Now let me break down some specific exemptions and strategies that millionaires use, starting with what I call the Big Four. First, capital gains treatment. When you or I sell stocks we've held for over a year, we pay long-term capital gains tax, which caps at 20% for high earners. But here's the kicker. Millionaires often never sell their appreciating assets. They borrow against them instead. Banks will happily loan money at low interest rates against stock portfolios or real estate. The wealthy get access to cash without triggering any taxable event. I've seen this strategy used by everyone from tech entrepreneurs in Silicon Valley to real estate moguls in Mexico City. Second, depreciation magic. This one blows my mind every time I explain it. Third, business expense optimization. This is where most people leave money on the table. Everything from your home office to business meals, travel, equipment, even certain insurance premiums can become legitimate business deductions if structured properly. I once worked with an entrepreneur who turned his passion for vintage cars into a business. Now his car collection, garage space, and related travel are all business expenses, legal, ethical, and incredibly effective. Fourth, retirement account maximization. Most people know about 401ks, but millionaires use solo 401ks, defined benefit plans, and cash balance plans that allow contributions of $200,000 or more per year in some cases. A client of mine, a successful consultant, contributes nearly $300,000 annually to his retirement accounts, all pre-tax. That's $300,000 less in taxable income every single year. But here's what nobody talks about: the psychological barrier that keeps most people from accessing these strategies. There's this weird middle-class guilt around tax optimization. People feel like they're somehow cheating by using legal strategies that corporations and wealthy individuals use every day. Meanwhile, Amazon, Google, and Apple have entire departments dedicated to tax efficiency, and nobody questions it. I learned this lesson from Warren Buffett himself. Well, not directly, but from studying his approach. Buffett has famously said that he pays a lower tax rate than his secretary. But instead of feeling guilty about it, he advocates for tax policy changes while simultaneously using every legal strategy available to minimize Berkshire Hathaway's tax burden. He understands that playing by the current rules effectively is different from advocating for different rules. The reality is, every dollar you save in taxes legally is a dollar you can invest, donate to charity, or use to build wealth that benefits not just you, but your family and community. When I optimized my tax strategy and saved an additional $45,000 per year, I didn't stuff it in a mattress. I invested it back into my businesses, creating jobs for 18 additional people. Here's my challenge for you. Stop thinking about taxes as something that happens to you and start thinking about them as something you can influence. Whether you're in Dallas, Vancouver, Paris, or Guadalajara, the principles remain the same. The wealthy succeed because they treat tax planning as a year-round strategy, not an April surprise. Start educating yourself. Read books like Tax-Free Wealth by Tom Wheelwright or The Tax and Legal Playbook by Mark Kohler. Find a tax professional who thinks strategically, not just someone who fills out forms. Most importantly, start thinking like a business owner, even if you're an employee. There are legal structures and strategies available to almost everyone. You just need to know they exist. Isn't going to change overnight, but your relationship with it can. The millionaires figured this out decades ago. Now it's your turn. Where are you watching this from? Drop your location in the comments. I'm curious how tax strategies differ around the world, and I love connecting with viewers globally. And if you're already using any of these strategies, share your experience below. Remember, subscribers get first priority on my responses, so make sure you've hit that button. The game is already being played. The question is, are you going to keep watching from the sidelines, or are you ready to learn the rules and play to win?